Welcome to Pearson Bryson. My name's Conrad. I'm a business analyst. I'm going to share an amazing secret hack to reduce your taxes pretty significantly. It's called IRS Code 280A, probably known if you scroll up Instagram or TikTok as the Augusta rule. Now, this rule is amazing because what this does essentially is it allows you to be able to rent your own property, your residence, to yourself essentially, and up to 14 days, and you can get that as a taxable write-off. It's not taxed, but it's only for 14 days max. Really awesome. But you can only do this if you own the property. So if maybe you own a house, maybe you own a condo, or some type of real estate that you own, you can actually benefit from this. And instead of renting out a place at the Hilton or Four Seasons or some type of business meeting location where they rent it to you, you can essentially just rent to yourself, take that as a taxable income that we could reduce your income, and you pay no taxes on it, and you reduce your taxable income. Pretty amazing. It's a crazy strategy, absolutely amazing. But check with your CPA or your tax person. I'm not your CPA, I'm not your tax person. Those two litigate me. Every situation is different, but again, you must own the property. And so that's something you want to look into. And what it does is you basically set up a rental agreement amongst you and your business, and you rent. And now this is where you can meet your team or even for yourself, and you get a tax write-off. Pretty easy. But there is a caveat to it. You must get comparable. You can't just get exorbitant rates and say, hey, I'm gonna rent my place for $10,000 per day. It must be reasonable. And the way to find it reasonable is by simply going online in your territory. Pearson Bryson, we're in every state, but our primary office is in California. So California might be higher than, for example, maybe somewhere in Ohio, for example. So wherever you're at, you must get whatever's normal rate to rent a business space, maybe through a hotel, maybe through a church, whatever, a place that rents business space to people. And you get at minimum 3 quotes to 6, I'll say. What you do essentially is you find what the average is and charge that. And make sure you print out what those prices are so you can prove to the IRS, if you're in the case that you're audited, these are what the prices are in my territory. In California, it could be as simple as $2,000 per day. It's a pretty exorbitant fee, but it is true. That's a normal here. But maybe in Ohio, it's only maybe $700 per day for a business meeting. So what you want to do, for example, is you want to get that, print them out, show the average, and then you multiply that 2,000 by 14 days. And now you just got yourself a $28,000 tax deduction. But again, there's a lot more rules and regulations into that, but it's fairly simple. You just have to follow the rules, and again, get those comparable quotes. Don't just pick a number, pick whatever the normal reasonable amount is, and that's what you could claim gets your taxes and reduce your taxes. This is how the wealthy win and win and win. Anyways, talk to your CPA and tax person. Like, subscribe, share. Welcome to Pearson Bryson. Ciao.